if you're a first-time buyer and you've been struggling to get that affordability, you're always short a little bit, the offers are coming in and they're a little bit higher than what you can afford, this could be a good news for you. I've got a lender that's just launched 5.5 times income for first-time buyers. And you don't have to be a professional or all the other bits and pieces that some of the other lenders have got. So it's really positive. Yeah, watch this video and I'll try to give you as much information as I can. And it is information, guys. Just because I'm telling you about this lender doesn't mean that I'm endorsing them as the right lender for you. On the description section below, I've also left a link to our website where I've talked a little bit more about this product, just bullet pointed some of the information. I can't absolutely cover everything here, but I've put it on the article on the website, so check out the link. And then hopefully you'll enjoy the video. Take care. Hi everybody, it's Pam here from Niche Advice. I'm an independent mortgage broker and I've set up this channel just to give lots and lots of information about UK mortgages. Right, fantastic news. We've got Nationwide Building Society, the biggest building society in the country, have announced as of today, however, I think they're going to be going live on the 26th of April, that they will now go up to 5.5 times income. So that's really, really good news for all those people that are first-time buyers that are trying to get onto the ladder, but they just can't quite get there for their affordability. Nationwide could be an option for you. So basically they would say they'll go up to 90% loan to value, which is again fantastic. Okay, so up to 90% loan to value. It doesn't mean you only have to go 90%. You could go 65%, 70%, which means, you can have 25% deposit, or you can have 10% deposit. And so yeah, that's good. There are some caveats to it. First of all, you've either got to go with for a 5-year fix or a 10-year fix, and that's basically the lender wanting to know a little bit more reassurance around your security, your sustainability of a mortgage. They're working out this enhanced calculation because they believe that there's a lower level of risk for you and for them, frankly, and they probably want to make a little bit of money on the way as well. So what else do we need to know? Well, we need to know that there is a minimum income. A minimum income is 31,000 for a single applicant and 50,000 for joint applicants. So you need to be earning at least that to be able to get this product. Obviously, you need to be a first-time buyer. What else do we know? Well, from their press release here, it's saying a couple on £50,000 a year can now afford to, well, potentially, subject to affordability checks, subject to all the other bits and pieces, up to £275,000, where previously it was £225,000. Now, look, I've put this as a headline, right? I'll probably put a nice fancy graphic on YouTube, but these type of products, you've got to look into the details of them. And that's why I've been saying for many, 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 many years that you should seek independent advice. Now, this product is available to you to go to direct. So you could literally watch my video and try to go direct and approach the bank yourselves. I always say, speak to an independent mortgage broker, because this product, although it's out there, although I'm reading out the headlines, may not be, and in fact, it's not going to be right for a lot of people. And there are lots of reasons around that. I'll try to touch on a few, but, go and speak to a professional. Go and speak to Niche Advice. Go and speak to another broker out there. But do your research, and by all means, this is not a recommendation for this lender just because I'm reading out a press release from them. Okay, it's not. So these are reasons of why you wouldn't go to them. First of all, you can't if you're self-employed. So there goes a big population. So you can't do it if you're self-employed, which is a shame. But they've been a bit conservative around self-employed as a lender. The things that they're a very, very big lender. They're well priced generally. They're not very flexible when it comes to property types sometimes, additional income sometimes, sources of deposit sometimes. So it's not funds coming from abroad. These could be the potential pitfalls. Adverse credit, any blemishes on your credit profile, depends on the loan to value. Sometimes on a low loan to value you could probably pass through, but it could be problematic later on. And there are also reasons if it's a case that's a little bit outside of the standard, when it goes to underwriting, the way they works a little bit different. They, sometimes I've found that they could drip feed a lot of information to you over time. So it's not just about the rate, it's not just about the fees. Obviously they matter. It's not just about the affordability, it's about the overall sort of suitability. Suitability, that's a good word. Suitability of, for you, that product. Just to add, because I'm probably going to be asked this question, I don't think this product's going to be available for help to buy, shared ownership, any of the schemes, even the mortgage guarantee scheme. So you can't mix and match, get 5.5 times income on a help to buy. I don't believe. Obviously, the actual product's going to be launched on the 26th, but there's another reason why it may not be suitable for you. Okay. Now, as a lender, they've been very good. They've been very supportive of the high loan to value market right the way through the pandemic that we're still in. But they were there. They've been out there with a 90% offering for a long time. What else have we seen? Well, we've seen this particular lender and lots of other lenders come out with their 95% mortgage guarantee scheme, so the government scheme. There are a few lenders out there also that have launched their own 95% schemes, which are nothing to do with the government guarantees. So, to be honest with you, I need to do a little bit more research on it and find out what the differences are between the two, because right now I haven't. I don't know. I need to look at the pricing. I need to look at the criteria to see if there's any affordability changes. But yeah, this is really positive news because they're such a big lender. And although we've had other specialist lenders playing in the 5.5 times arena, we've got other lenders out there that are getting 5.5 times income. Some of them are non-high street, which means the rates are not that great. Some of them you need to be a professional. I've done a video on this with a lender called Platform. We launched a professionals range whereby they would go up to 5.5 times, but you generally have to be very restrictive criteria. You've got to have, be qualified recently. You've got to be an accountant, solicitor. But they've got a very strict criteria around the product. Where this looks pretty good, guys. If you're you're a first-time buyer, you've got the income earnings. It's a pretty straightforward case, and your problem is affordability. This could be the right option for you. But if you do need advice, just click on the link below, and then it will take us to an inquiry form. Take care. All the best. The content of this video does not constitute giving advice. It's purely for information purposes. All cases should be discussed with a professional mortgage broker. As a mortgage is secured against your home or property, it could be repossessed if you do not keep up mortgage payments. Niche advice is authorized and regulated by the Financial Conduct Authority.